Ever wondered how Canada's economy is holding up amid a trade war with the US? Let's dive into some big news from March 6, 2025. Canada's trade deficit shrank to just $506 million, a much smaller gap than the $1.56 billion experts predicted. This isn't just a number. It's a sign of Canada's grit in a tough economic fight. Here's what happened. Imports to Canada dropped by 1.5% in March, with a hefty 2.9% plunge in goods coming from the US. Why? Trump's tariffs, hitting 25% on Canadian steel, aluminum, and other goods, plus 10% on energy, made US products pricier. Canadians pulled back, especially on cars and machinery, which saw imports fall by $1.2 billion. Meanwhile, exports to the US took a hit too, sliding 6.6% as those same tariffs bit into our $33 billion steel and $97 billion oil shipments. But here's the twist. Canada didn't just sit there. Exports to other countries like the EU, Japan, and India jumped, nearly making up for the US drop. For example, aluminum exports to the EU rose 15% after a new trade deal, and timber shipments to Japan climbed 8%. This pivot kept the trade deficit way lower than the $1.41 billion we saw in February. Why does this matter? A smaller deficit means Canada's economy is tougher than it looks, even with Trump's tariffs shaking things up. But it's not all rosy. Those tariffs are still costing jobs, with 68,000 at risk in Ontario alone this year. Plus, Canada's fighting back with $155 billion in tariffs on US goods like whiskey and cars, which could raise prices for everyone. March's numbers show Canada can adapt by selling more to the world, but the trade war's far from over. With $2.6 billion in daily US-Canada trade at stake, every move counts. What's next for our economy? We'll keep you posted.